Prayesh, good to have you. Thanks so much for joining in. Just let's start off, because we were talking about BP, HP, IOC. Let's just start off with those stocks. And just wondering, what do you make of the kind of erratic moves that we've seen? And of course, the erratic flip-flops on the price hikes or the lack of them in both petrol and diesel by the government. What do you do in these stocks if you're holding them in your portfolio, the oil marketing companies?
See, ideally, we have been recommending our clients mainly to keep a trading view on these stocks, because as for investments, these investments with a long-term perspective, there are a lot of uncertainties in these stocks. You don't know as to, even after the conclusion of FY12, we don't know as to what would be the subsidy sharing pattern, eventual subsidy sharing pattern for the whole of FY12. So, it's a big element of uncertainty, and we generally advise our clients to have trading views on these stocks, hold them for a period of around couple of weeks or a month max, and possibly just take profits or take profits on based on positive news, like we were expecting a petrol price hike, but that eventually did not turn up. So those kind of news generally we look for, and we recommend our clients to have trading views on these stocks. For a long-term perspective, these stocks would be a complete avoid for us as of now, because of the kind of uncertainties are there on the earnings of these companies down the road.
Well, fair enough. Prayesh, what is the strategy on Cairn India now? After CES announcement, the stock has come off sharply, and some brokerage upgrades have started coming back, at around about 330 odd levels. Are valuations looking attractive to you?
Definitely. Cairn India is one of our top picks in the oil and gas space right now. Although the impact of CES has more or less been factored by the price correction what we've seen in the past few months. The main thing what has to be seen for Cairn India down the road is the kind of pending regulations that are pending approvals from the government. How do they come in going ahead? The company wants to ramp up production at its Rajasthan field, but there are some government approvals that the company is waiting for. Once that comes in, then definitely you will see a smart jump in their volumes, and the company has targets of like 240,000 barrels of per day production from 125,000 currently. So those kind of quantum jump can be seen in the next few years, and that definitely will flow down to the bottom line. And furthermore, you can expect a very strong dividend payout from the new owners of the company. In that terms, I think so Cairn India can be a very good bet for a long-term investor, and can have a target price of around 400 on the stock for a medium-term perspective.
Prayesh, strategically, aside of Cairn, is there any other top recommendation that you are recommending to your clients right now? And there are a number of stocks, we'll discuss each of those as well. But purely from a medium-term perspective, say 6 months to a year, aside of Cairn India, anything else?
Apart from Cairn India, we like IGL and GSPL to a great deal, and also Petronet, the gas-based stocks. These are the stocks that we really like. And IGL in particular is one of our top picks, considering that the kind of discount that prevails between a CNG car today and a petrol car, it's pretty big, and that allures private car conversion very well, and the economics make sense for the private car conversions. And furthermore, it's expanding its territories into newer regions of Greater Noida and Ghaziabad and Faridabad. So in those kind of cities also you see a huge potential. PNG, in terms of PNG, Delhi itself is under-penetrated. There's strong growth in volumes that can be expected from IGL over the next 2 or 3 years. In that terms, we believe there's a very strong earnings visibility, and the only risk there is if the LNG prices shoot up from the current levels further high, which we don't see happening at least in the next few months, as the Japan impact slows down. So in that terms, I think so it's a very good situation for IGL, and that's the reason we have it on our buy list.
You think, just referring to the point that you made earlier, Prayesh, you think that LNG prices could go down by 20 to 30% over a period of the next 3 months once the Japan effect wears off? One. And two, does that have any resultant impact on Petronet LNG, or that would effectively be net neutral because they are merely importers and have a pass-through mechanism?
LNG prices, we don't see that kind of a sharp correction, kind of 20-30%, because it will take some time before the nuclear power ramp up happens in Japan again. And until that time, I think the LNG and coal would be the key source, or the liquid fuels will be the key source of energy for Japan. In that term, the demand-supply scenario will continue to be in favor of demand for the next few months as well. But we do not see substantial upsides from current levels. And in case the prices even drop, definitely that will be a better scenario for Petronet LNG, because a lot of its earnings, a significant portion of its earnings have started arising from spot cargoes, and spot cargoes will happen at a higher level if the LNG price is correct. And further, in the recently held budget, we have seen that custom duties for power sector import of LNG has been reduced, have been made 0%. So in that terms, I think so it becomes attractive for power customers to go for LNG if the prices go below $10 or something like that.
Right. What's the strategy then on some of the movers, that is the exploration blocks, particularly ONGC, the MOU with ConocoPhillips for shale gas and other deep water drilling? Do you see that materially impacting the company's East Coast plans?
That has to be seen over a longer period of time. These things can definitely help companies like ONGC. ONGC has been so far exploring in the or producing from the shallow water blocks, but has very less expertise in the deep water blocks. So definitely somebody in the likes of ConocoPhillips coming in will help the company, but those benefits will be seen over a longer period of time. And for ONGC, our recommendation is a buy, but what we feel is that the subsidy issues again will keep the stock on the underperformance side, because the other impact has been the cess, but in terms of subsidy sharing, the only fixed leg up till last year was the upstream, but at the end of FY11, the government changed the policy to take 40% from the upstream share, and even for FY12, in the first half it was 33%. Then again in Q3 we saw that share going up to 39%. So even the only fixed leg in the subsidy sharing pattern was upstream, which has now again changed to volatile things. So the earnings risk have increased for ONGC and Oil India as well as GAIL. In that terms, there is still earnings risk for these companies as well.
Right. What's the call on Reliance then, Prayesh? I mean, continues to trade in a range despite the fact that gas volumes remain under pressure. There's no direction really coming in on the stock.
See, Reliance, one of the key points apart from the fall in KG-D6 production has been the refining margins. Refining margins of late have been very weak, and that has been one of the key reasons why the stock has underperformed the peers, and the margins have just started recovering. And going ahead, we see that the margins should improve from current levels and should head towards the region of around $8 per barrel for Reliance in the whole of FY13. And in case the gas production stays at current levels and does not fall from the levels it's producing right now, we see upsides for Reliance from the current levels to around 830, 840 levels.